What's up, people? Welcome or welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. So, I'm back from Texas, and since I still have a bit of time on my hands, I decided to drop some extra content this week. The crypto space has been on a nice uptrend. Positive momentum resumed with the Ethereum London fork going live last week. And tomorrow, we actually get to find out when Cardano will finally receive its smart contract functionality. The anticipation of that announcement was good enough to lift Cardano to its current price of $1.76 for a gain of just over 27% this week alone. I will link an article if you're interested to learn a little bit more about Cardano. It is certainly worth some consideration when you realize that it's expected to grow and hit potentially as high as $10 a coin by year end. You can also use my Coinbase referral that I'll have in the description below and receive $10 worth of free Bitcoin when you sign up and make your first purchase of $100. So I should say that, again, this is not financial advice, simply highlighting an opportunity and giving you the means to follow through should you be interested in doing so. All right, so with that out of the way, let's talk about today's topic. And that's going to be Virgin Galactic. They reported their Q2 results last week on the 5th, and the stock initially jumped on the news, right? So closing the week in positive territory. But then since Monday, it rolled back some of those gains and actually has been on the decline since then. So in today's video, I'll go over my summary and main takeaways from the call, then get into why we are seeing the sell pressure on the stock, and wrap up with what I plan to do in light of the new information that we received. Go ahead and drop the video an early like, as it greatly helps the content get pushed out to more people who may also find the information beneficial. And overall, it does help the channel grow. So thank you in advance, and let's get into it. All right, so I've said this before, but it's definitely worth saying it again. Virgin Galactic is a pre-revenue company, and at this point in time, it is still a highly speculative investment, in the sense that what they're trying to achieve has never been done before. Space tourism is a brand new industry, and I would say that you need a minimum of a 5-year time horizon if you're investing any kind of meaningful amount into them. Now, with that in mind, what do I primarily focus on these earning calls? Well, there are 3 things really. That would be how Virgin Galactic is doing against the milestones they have outlined to reach commercial state, their cash burn, secondly, and finally, now that they are closer to commercial state, how do they plan to scale the business and the demand for their offerings? So first, let's talk about the milestones. Virgin Galactic cleared 2 major milestones in July, the FAA license, and the first full cabin crewed flight with Richard Branson on board. The event was a huge success, to say the least. I mean, we're talking 19 million views through the event live stream and media coverage in over 65 countries around the world. This then only leaves 1 major milestone remaining in 2021, which is the revenue-generating flight, Unity Flight 23, with the Italian Air Force expected to take place in late September, per the comments during the earning call. A formal commercial service will not actually start until mid-2022, and that's going to be with Unity Flight 25. There's therefore going to be a 9-month gap roughly between the last flight this year and when we start commercial flight next year. Now, granted, there will be Unity Flight 24 in between, but that is going to be the last planned flight in early 22 to formally wrap up the testing program. That will take place after the enhancement period. Now, more on this enhancement period later in the video. So this may initially sound like a large gap, but here's how Virgin Galactic will be utilizing the time. Focus will be placed on getting more clarity on actual demand. This is why ticket sales was reopened effective on the date of the earning call. The private astronaut experience will now start at $450K, and scientific research tickets will go for the same $600K as previously. Secondly, a priority list will be established to sort through the 600 customers who have already paid in full back when tickets were only $250K or less. They will also reach out to the 1,000 customers who have already put a deposit down and work on locking in those sales. And finally, onboard new paying customers at the new ticket price. So that's on the demand side, and it should give us shareholders a good sense on upcoming earning calls of how healthy the demand pipeline actually is. But the biggest issue facing Virgin Galactic today isn't the demand. or even their cash burn. At the recent capital raise they did through the stock offering, while the stock was flying high above $40 or so, and they now have $1 billion on the balance sheet. So they're well capitalized. They're going to be just fine. The real issue, however, is that they're supply constrained. So current state, VMS Eve, which is their only carrier plane at this point, can only fly at a rate of 10 flights before requiring a major maintenance, which could take the plane down for a few weeks. Their Unity spaceship, that's their first gen spaceship, has a turnaround time of 7 to 8 weeks between flights. So that basically means that they can only fly it about 6 times a year currently. The newest Imagine, so that's their Gen 2 spaceship, has a turnaround time of 3 to 4 weeks between flights. So that means that they could fly that one about 12 times a year if everything was going fine. Now, if you factor in the fact that there's 6 seats on board of each spaceship, it would take roughly a year of non-stop operation to get through the current backlog of 600 customers who have paid in full. That already puts us in mid-2023, but since we have to account for at least one major maintenance for VMS Eve and potential delays due to whatever unforeseen event, we're really talking early 2024. So that brings us to the enhancement period that they talked through during the call. Its goal will be to complete structural improvements to both VMS Eve and Spaceship Unity. As a result of those improvements, VMS Eve will be able to fly up to 100 flights between major maintenance, which should greatly reduce downtime. Spaceship Unity turnaround time between flights will improve to match Spaceship Imagine at the 3 to 4 weeks instead of the current 7 to 8 weeks. So if you cut through all this, it basically means that Virgin Galactic will be able to get through their initial 600 backlog within half a year, give or take a month or two. Either way, it basically means that it would be about half the time currently required without these enhancements. This is critically important when you consider that beyond the 600 people we just talked about who have paid in full, there's another 1,000. And that's even before we get to anyone else that now gets signed up. So the enhancement period will kick off right after Unity Flight 23 is completed in late September and is projected to last a solid 4 months. And during that time, VMS Eve and Unity will be grounded. And that right there brings us to reason number 1 why the stock was hit with downward sell pressure. In my previous video on Virgin Galactic, I did warn you guys to not rush into buying the stock while we were at elevated levels around $40 and above. The first half of 2021 was full of catalysts, but once Unity Flight 23 is complete in September, there will be a decent period of time of inactivity, right? This was confirmed during the call, and as a result led to a downgrade by Morgan Stanley analyst Kristen Leewag. So she dropped her rating from equal weight to underweight, basically hold your positions to sell it, and assign a price target of $25. And the reasoning she provided, and I quote, as the company completes a catalyst-rich period and transition to a prolonged period of no flights, shares will return towards a long-term valuation of $25. The second reason has to do more with the macro environment, and most of the NASDAQ stocks have been hit pretty hard these past couple of days due to the 10-year bond yield rate moving up a few points. All right, so that was a lot of information, but what do I make of all this? Let me start by saying that I 100% agree with her reasoning. And the reason being that with no major revenue coming in near term or catalyst to provide momentum, there is a good chance a decent amount of folks are going to lose patience and sell over the coming months. So the $25 price target is actually a nice psychological anchor for people to kind of target as the stock, trades sideways for a while. As I said before at the start of this video and in previous ones I've posted, investing in Virgin Galactic does require a 5-year time horizon. The reason being that supersonic point-to-point flight opportunity that Virgin Galactic is pursuing is likely not going to see the commercial light of the day until 2024 or 2025. But equally important is the ability to scale up the space tourism side of the business to meet the current and future demand. They laid out the framework for how they will get there, and that involves the next generation carrier planes that will be capable of 100 flights, as well as the Delta class spaceships that will be capable of flying with only 1 week turnaround time. So a significant improvement from what they will be able to do even after this enhancement period. And even though they kind of danced around the question of when do they expect to turn a profit, They did say during the call that they are laser focused on getting through the first 600 fully paid customers as quickly as possible. And the main reason for that is that some of those folks paid 200K and in some instances even less. Essentially, the sooner they can start flying people at a new rate, the quicker they can improve revenue and ultimately reach a profitable stage. All right, so let's bring it all back full circle. And the bottom line for me is this. The $25 price target does provide a nice psychological anchor. And for many, that will be enough to keep the stock trading sideways around it, give or take a few dollars. Add to that pressure from the macro environment later this year when the 10-year bond yield rate starts creeping back up, and we could realistically revisit the $20 range or so. Now, if you've been following my channel, you know that I still have another 300 shares that I'm trying to acquire at a reasonable price, and therefore I plan to be opportunistic here. I'm simply going to wait, be patient, and as the price continues to decline, I'm going to keep adding until I've acquired that desired share number. The last thing I want to leave you with is this. Consider that Virgin Galactic all-time high is $62.80. Currently, the stock is trading for around $25.75. So any shares purchased at this level would be a double on your investment once we return to that all-time high. And though there's no guarantee, with the demand that Virgin has, we should revisit those levels as commercial flights gets underway at a more regular pace. And with that, this will do it for today's video. Hopefully you found the content insightful, and if so, please drop the video a like and share with others, as it greatly helps the channel grow. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content. I'll see you back here on Sunday when I'll discuss the NEO earning call takeaways. As always, thank you for watching, stay humble, hustle hard, and I'll see you in the next one.